Okay, good evening, everybody. Trust you are all doing great today. Trust you are all doing fine tonight, rather. So I quickly share the link so that the people on YouTube can join us. Just like I said last week, we are more than we are close to 5,000 in the SBR group. APEX runs all over the country. So we are too much than the group. So only 100 can join the class, then the rest are going to stream on YouTube. So now, our topic for tonight is IFRS 8 operating segment. Operating segment. That's our topic for tonight. Let me enlarge my screen because of the people on YouTube so that they can see very well. So, first and foremost, welcome to tonight's class. You are welcome once again. This is our official class for SBR, and we are starting with the standard. Just like I said on Tuesday, I said the plan for the diet is that throughout July we are going to be treating standard. We are going to be taking on standard. Then when it is first week of August, then we move directly to group account and the likes. So our topic for tonight is IFRS 8 operating segment. So before that, I quickly want to chip in some things for the people just joining us and for the people that joined us last night. So what I really want to chip in are just two. I said it on Tuesday. I'm going to emphasize it. I'm going to emphasize on it again. Please and please, your SBR, which is your corporate reporting before, is very easy to pass when you are familiar with your standards. In fact, it's quite unfortunate there is no time. I usually schedule like 30 minutes to look at last diet. We should look at it together. So we should just analyze last diet question so we can see. So if you look at last diet question, for people just coming to final level now, please, about 5 questions on standard came out last diet. So when you are very, very strong in standard, when you are very strong in accounting standard, you will be fine. Then you just join in with your group account, then you join with your ratio analysis, then you are fine because those three alone covered like 75% of your syllabus. So please let's take note of this. We are going to be treating standard one after the other. Then that's the firstly. Then secondly, I also said it on Tuesday. Please and please don't let us depend only on APEX. Please, let's get extra textbook. Let's get extra textbook. I can study path cannot take you only anywhere. Apex lecture cannot take you to where you really want to go because on standard now we can only solve, let's say, one question, or maybe during revision we can now solve one more or two more questions. But personally, you need a personal textbook to do what? To read on your own and study on your own. So lastly is again, please let's start reading on time. We analyze the syllabus on Tuesday. We can all see how complex the syllabus is. Syllabus is too wide. So for somebody now saying I will start reading by September or October, time has gone though. You need to start reading now. And that's the secret of ICANN. It's a sacrifice. So pass ICANN is very easy. Just read, solve past question, make sacrifice. You will pass. But once you are risking it, okay. So that's just my advice. So now let's start the class proper. So before I start the class, there is something I quickly need to emphasize, and I need everybody to understand this. 25% of your syllabus is your accounting standard. I said it when we analyzed the syllabus on Tuesday. my colleague, Mr. Sulaiman, 25% of your syllabus is coming out. And every diet, at least 3 or 4 standards will come out. Minimum standard that will come out, at least 4. So you need to like, and there are so many standards. There are so many standards, almost more than 40 standards. Then how can you now know the one that will come out, this one, the one that will not come out? You will not know. You are not going to know that. I don't know this one that will come out though. So you need to start reading on time. So this will take us to the first plan of today, which is this Excel I want to show you. So sorry if you can see my screen again. I want to stop this Microsoft Word. Then I want to switch to Excel. So if you can see my screen, please let me know. Please let me know if you can see my screen. So okay. I'm trying to, I will represent my Excel now so that, okay, if you can see my screen, let me know. Okay, so can we see my Excel now? Okay, that's fine. So now, these are your accounting standards. And don't forget again, don't forget, all the standards are examinable in your SBR. All the standards are examinable. The only 2 standards that are not examinable are IFRS 4 and IFRS 17. IFRS 4 is insurance contract. Then there is a revised standard again, IFRS 17, which is insurance contract also. So those 2 are the only standards that are like removed. Even in ACCA, they removed insurance contracts too. So please take note. The rest from IAS 1, which is now IFRS 18 now, to IFRS 16, which is what? Which is lease. They are going to test it. So now it is very, very important. I don't know. Some people might have known this. Maybe I lectured them last night, but I need to emphasize on it again. All your accounting standards, you need to understand them. Now, please, let's look at my screen. Can everybody see my screen? Okay. Now, please, let's carefully look at my screen. There is something I want to explain here. So now, all your accounting standards can be subdivided into 4 parts. In SBR, is subdivided into 4 parts. Now, we have non-financial asset standard. These are the standard that relates to IAS 16. You see, IAS 16, which is intangible assets, property, plant, and equipment, PPE. There are some standards that are very, very related to it. And that is where SBR is going to. Please, I want you to take note. ICANN before is corporate reporting, then now it is SBR. The way SBR is, because I'm very familiar with SBR, I'm a student of ACCA. The way SBR is it comes in like in exhibits, in a scenario. Nobody will ask you, and I'm very sure people you guys are familiar with this. You SBR, where ICANN is moving to now, all the questions you are going to be seeing is going to be a scenario based. Nobody will tell you that what is the requirement of IAS 16? What is this? What is that? Nobody will ask you that. This is professional level. So please, all your standard is going to be in scenario based. Let's say in 2 to 3 paragraphs, like 12 lines or something. So where I'm going is that they can test IAS 16, then IAS 37, they can join it together. They can join impairment to it. So where am I going? My point number 1 is that then they can set IAS 23. In a question, they'll just split it, transaction 1, transaction 2. In ACCA, they call it exhibits, exhibit 1, exhibit 2. So they'll just tell you to explain how this transaction will be reported in the financial statement. Bam. So where am I going? These non-financial asset standards, they are very related. All these standards, my A part, They are very, very related. So where I'm going is that for you to understand IAS 16 very well, for you to I understand IAS 16, you must read IAS 40, you must read IAS 23, you must read IAS 36, impairment of assets. You must read the IFRS 5 because requirement of this is inside this, is inside this. This one is inside this. When we start our standard next week, when we move to IAS 16 now, I will show you how they are related. And when you are like conversant with IAS 16, you know that it is a very complex standard that relates to so many standards. So that's your A part. Then B part, standard excluded in skill level. Standard excluded in skill level. There are some standards that you can't see in skill. So this relates to people coming from skill level. There are 5 standards that are excluded from skill level, although there are much, but I can just see there are 5. IAS 21, which is effect of foreign exchange rate, IAS 19, employee benefit, IFRS 2, IFRS 6, and IFRS 8 that we are treating. These standards, you cannot see them in skill level. So number one standard that my own mentor, my lecturer usually tell us that you should understand when going for exam is all these 5 standards, because they are not in skill level, they are in professional level. So the chances of testing them is very, very high. And I said it last diet to my students here in Apex, and IFRS 2 came out. In fact, when I wrote my diet, it was IFRS 8 and IAS 19 that came out. Last 2 diets, IFRS 8 come. I don't say it comes out every diet, though they will test everything, but you must know these 5 standards because they only test it in final level. Then these 5 standards, I can't say they are not related to IAS 16. If you look at it very well, the only standard that is somehow related is IAS 21, which is effective foreign exchange rate. Is somehow related. Then your C parts are your key standard. They call it key standard. This key standard in your professional level, please, you must understand and know them. We are going to try to schedule them, except IAS 16, because if you push IAS 16 down to the September, October, when you are doing IAS 40, you are doing IAS 36 and 38, 41, there will be a problem because they relate to IAS 16. That's why we are going to do IAS 16 very soon, probably this month. So why IFRS 9? These are your key standards. In professional level, you must understand all this 4 standards. If I can now add to it, let me add IFRS 16 to it. IFRS 16 is lease. IFRS 16 is also a very key standard. These 5 standards in professional level, when you are going to exam, you must know. Can you see that we have named like 10 standards now that you must know going to the exam? Then we will now add this non-financial asset standard to it. Can you see how many they are? Then we have other standard, which is IAS 8, accounting policy, changes in accounting estimate and error. Then IAS 10, event after reporting date. Then IAS 33. I can just catch you one day. They will just set IAS 33, any per share. I can't just bring it from anywhere. You just find it in your exam. And I can remember last 2 diets, IFRS 13, fair value measurement, it will come out. So invariably, all these standards are very, very important. We will try our best at APEX to make sure we cover much of the standard. However, you have your own part too. Please, let's get textbooks. Let's get past question. If possible, let's be familiar. Number 1 key in your SBR for you to pass SBR is this standard, because in the exam they are coming out. But the one that will come out, you don't know. But when you start like buckling up now, you will be fine. So this is my first emphasis tonight. I want us to be very familiar with all the standards. Once you are fine with this standard, in fact, last diet, IFRS 9 came out, IFRS 15 came out. Then IFRS 2 came out. That's why I highlighted it. IAS 37 came out. Then PPE and tangible assets came out too. So about like 5 standards came out. And last 2 days, I can't was funny. They bought IFRS 1, first time adoption of financial reporting standard, international financial reporting. And they brought out IFRS 13. That was 2 days ago. So they can be very funny. So this is number one thing we need to discuss tonight. This is the first thing we are going to discuss tonight. So materials is going to be forwarded alongside with all these standards. Then also, if you have your personal textbook, so that's the first part we are dealing with tonight. So now let's move to the business of the day, IFRS 8 operating segments. So let me stop presenting this. Then I can now move to IFRS 8. Then let's move to our IFRS 8 that we have before. So don't worry, I'm going to share this Excel. Don't worry, I will share it. So now let's start. IFRS 8. Okay. So now IFRS 8, we need to discuss about the objective and the scope of the standard. So first and foremost, I also need to tell you this. There are some standards that they are called disclosure standards. All you need is just to disclose. All you need is just to disclose. Number one of those standards is what? Is IAS 24. Related party disclosure. It's just a disclosure standard. Then we have IFRS 8. IFRS 8 is also a disclosure standard. Then we have IFRS 7, which is financial instrument disclosure. So where am I going tonight? Operating segment is a very, very simple standard, a very, very straightforward standard. It is a standard that just discuss about some disclosure and entity need to need. So now let's move on. Objectives and scope. So the standard applies to entities whose equity or debt instruments are traded publicly. That means, or in the process of issuing equity shares in the public. So now, please, let's remember to IAS 33. IAS 33 is earning per share. Earning per share is also applies to entity whose debt or equity are publicly traded. They are otherwise known as quoted companies. Quoted companies. How can you know quoted companies? Orlando PLC, First Bank PLC, Dangote PLC, any company that you are hearing PLC, they are called quoted company. That means their shares are publicly traded. Anybody can buy their shares. Anybody can be a part of the shareholders of the company. So the objective of or the core principle of the standard is to disclose information. That's the objective of the standard, is to disclose information that enables the users of financial statements, to evaluate the nature of the business activities and the economic environment through management. So to just make this standard very simple to us, it is very, very easy. What this standard is saying is that there are some big companies, they have so many segments, they have so many branches. Example are the banks. If you agree with me that Access Bank now, if you look at the branches Access Bank have in the whole country, you can't even count them. So all those branches, they are called segments. They are called segments. So in the financial statement of Access Bank PLC on its own, in its financial statement, IFRS 8 now told them that you need to disclose some segments, You need to disclose that this segment this branch earns a lot of revenue. So, however, there are some disclosure, there are some criteria that must be met, like all the thresholds that must be met before an entity disclose a particular segment. So now, before we move there, so now introduction to IFRS, the same thing I just said now. It requires the entity to disclose information to enable users to evaluate nature and effect of business activity. So now let's forget about them. So now let's pick it one after the other. Definition of terms. So what is a segment? The standard defines a segment. The standard defines an operating segment. Then the standard defines CODM. CODM is Chief Operating Decision Maker. So first and foremost is a segment. What is a segment? A segment is a component of a company, a department of a company, a branch, or a subsidiary. Can you see now? I said it earlier. A segment is large company, big companies that have so many departments or that have companies, so many branches, they are called segments. Now, IFRS 8 now defines operating segment. So a segment is different from operating segment. Operating segment is a component of an entity that engages in business activity, which it can earn revenue, including revenue and expenses relating to transactions with other components of the same entity. So operating segment is a component of an entity that engage in business activity in which they earn revenue. So when a company now APC PLC, the company now has 5 branches. The company has 5 branches: branch A, branch B, branch C. Branch A is selling bags. Branch B is also selling like shoes. Then branch C is selling food. They have so many branches, or they have so many subsidiaries. We can call that an operating segment because that branch, they engage in business activity. And whenever you have a business activity, you are going to earn revenue, because the sole aim of setting up a business is to earn revenue, which is to make profit. So operating segment, that's the definition of operating segment. And please, I need to add this for people joining the class. The head office is not an operating segment. Please, let's take note of that. I think I'm going to include it. The head office is not an operating segment, because the head office is just except when the head office has a marketing or a production department that also runs business activity. So please, let's take note of that. For the definition of operating segment to be met by an head office, that head office must engage in business activity. And if you agree with me that most head office are just they are just an office where the directors, the key management staff of the organization will just designate. If you agree with me, that is head office. Majority of head office, they don't usually sell or something. All what they do in head office is usually like, let's say, customer care and the likes. So for an head office to be classified as an operating segment, it must engage in business activity. So please, let's take note of that. Now, moving to reportable segments. Reportable segment, just like I said it earlier, a segment is like a branch, a company, a subsidiary, and the like. However, for example, again, I said it that we have ABC PLC. ABC PLC has 5, or let's say 10 branches. It has a branch in Ibadan, we have Port Harcourt, Kano, Kaduna, Lagos, Abuja. So when we now counted all the branches, which is otherwise known as segments, they are like 10 to 15 segments. So now in your report, in your annual report, IFRS 8 now tells you, wait, you need to report some segments. So what IFRS 8 is now telling you is that you are not going to report every segment. It does not necessarily mean you are just going to report all the segments. All you need is just what all you need is just to report some segments when some criteria are met. So that is a reportable segment. There are some segments out of that 10 segments that I mentioned, for example, maybe you can only report only 3. So IFRS 8 now gives us some criteria that when it is met, then you can report it. So now let's talk about it. Reportable segment is an operating segment that its material information such as revenue, assets, liability, profit or loss need to be provided in the notes to the financial statement for performance assessment purpose. So that's a reportable segment. Now the last one is CODM, which is Chief Operating Decision Maker. Please, in the exam, or please don't write CODM. Please write it in full. Chief Operating Decision Maker. This is an officer who identifies function for allocation. This chief operating officer can be a managing director or chief executive. You know, chief executive in an organization, they are the one that takes care of, they are the overall head of operation in terms of head of director of finance, director of operation, director of marketing. They all report to the CEO, which is the chief executive officer. However, in IFRS, they call it chief operating decision maker. This is an officer who identifies function of for the allocation of resources and assessment of performance of the operating segment of an entity, not necessarily a manager with specific title. So that is chief operating decision maker, CODM. So now let's move. Okay, this is 9:30. This is 9:30. Now IFRS 8 now discuss, okay, 9:30. IFRS 8 now talks about definition of operating segment. So the first one we are just talking about, that's just a little explanation on operating segment. So now IFRS 8 now give us the real definition of operating segment. So number one is that operating segment is a component of an entity. Just like I said, a component of an entity. A component, if you remember very well, I said it can be a branch, it can be a department, it can be a subsidiary. So IFRS 8 defines operating segment as a component of an entity that engages in business activities from which it may earn revenue and incur expenses. If you are very, very conversant with banks, Access Bank now in Lagos, when you have a branch, Access Bank, you agree with me that that bank is going to earn their revenue and they are going to incur the cost. And what main revenue of banks is interest. Please don't let us forget interest. The interest, when you collect loan, they charge you. That interest is the revenue of the bank. So if you go to the financial statement of the bank, when you go to revenue, their revenue is interest. That is the core revenue of a bank. So if you agree with me that branch A, maybe in Ikeja, branch A in Ikeja now, if you go to that bank, they can give you the information about the revenue, the total interest received, or the total interest earned within that period. They are going to give you. And they incur costs. And you know that for a bank to exist, they must incur so many costs, just like electricity expenses and generator and the likes, internet expenses. So that's the first definition of operating segment. The first definition of operating is a component of an entity that may earn revenue and incur expenses, including revenue and expenses relating to transactions with other components of entity. That means it includes internal revenue. You know, when a company has 2 branches or 3 branches, branch A, branch B, branch C. So branch A can sell to branch B. I'm sure everybody now, we are in final level. You remember your PM, you did transfer pricing. So when you do transaction between branch A and B, that's transfer pricing. So now that's definition number one. Definition number two is a component of an entity whose results are regularly reviewed by the entity CODM. So that's the reason why I'm using CODM this morning. So the for an operating segment to exist, the CODM must regularly review. Maybe it depends on every company accounting policy. Maybe it's every month or quarterly or half yearly. So the CODM, the chief operating decision maker, must review it and make decision about allocating resources to the segment and assessing its performance. While the third one is a component of an entity for which discrete financial information is available. That means a financial information, a separate, discrete, discrete financial information means a distinct or a separate information. So if you go, just like I said, when you go to Ikeja branch of GT Bank now, they can give you information, they can give you financial information. These are monthly revenue, these are monthly costs. So they will give you information, and that is it. So that is the definition of operating segment. So let's move, let's move, let's move, let's move. So I hope people are still with me. Hope people are not sleeping. Please don't let us sleep. The class is just starting. Okay. So now let's continue. Let's continue. So let's move to the next item. Now, aggregation of operating segment. So before this aggregation of operating segment, there is something I need to explain. You know, I explained the other time, a reportable segment. I said it that in a situation whereby we have banks, we have companies, let's say Dangote PLC now. Dangote have a lot of branches, a lot of subsidiaries. When we are talking about Dangote PLC now, we cannot talk about a branch. We are talking about subsidiary. We have Dangote flour, we have Dangote cement, we have Dangote sugar, we now have oil and gas now, which is Dangote refinery. Can you see that all these segments, these are segments. In Dangote case now, is like a subsidiary. So now in the financial statement of Dangote PLC, that means in the group accounts, you know, when a company has two or more subsidiaries, IFRS 10 says it is very compulsory. It is, you cannot escape it. You must do what? You must prepare group accounts. You must prepare group accounts, except when some criteria are met. When we come to group accounts, we are going to discuss about that. So now, if Dangote want to present a financial statement today and want to report all the segments, there are some even segments, there are some subsidiaries that we don't even know. There are some subsidiaries of Dangote that we don't even know. Maybe they are just in the north alone or the likes. We just know, okay, this is Dangote, this is Dangote. So it's because that segment cannot be reported. The criteria cannot be met. So now IFRS 8 talks about identification of a reportable segment. A reportable segment is a segment that you must report to your stakeholders, that you must report in your financial statement. Out of that 5 or 10 segments you have, you report some of them as a result of the progress of that component, how the component is doing fine. So that is where we are going. So now, for a reportable segment to be identified, there are some thresholds, and that is the core principle of IFRS 8. Please, if you are expecting any question on IFRS 8, the question number one that you must be waiting for, that you must be watching out for, I tell people in IFRS 8 is what? Is identification of reportable segment. How can we identify a reportable segment? How? That is the first thing you must understand. Now, IFRS 8 gives us what? This is the definition of reportable segment. Now, reportable segment, look at the definition again. Reporting segment are those operating segments or aggregation of operating segments which segment information must be separately reported. That means there are segments that you must report in your financial statement. If you have 20 segments now, you have 20 branches, you cannot report all the 20, because how many pages do you want to use? Because before you can report a segment, you have to provide some information about that segment. So how many pages do you want to use to prepare your financial statement? So it is not all of them. That is why IFRS 8 gives us some criteria, some threshold. They call it reportable threshold. So they are what we are going to be discussing next now. So for a segment to be reported, look at it. An entity shall report separate information about an operating segment when they meet the following threshold. This is where we are going. For them to report a segment, they must, it is a must, they must meet some threshold. Let me highlight it so that in your note you are going to meet it. So the number one is that revenue threshold. They call it revenue threshold. Revenue threshold is that for a segment to be reported, the segment must have 10% or more revenue. That means internal and external revenue of all the operating segments. So now, what are they saying in number one? Let's say my company, my example, the example of my company is what? Is company ABC, right? I now have 5 branches, and that is my segment where we are saying now. So out of these 5 branches, the total revenue of all those 5 branches is 50 million. The total revenue of that 5 branches is 50 million. Example. So now, IFRS now give us some criteria that out of these 5, you must report some, and you will not report anyone. Some. So how are you going to report? Which one are you going to report? Now look at their revenue. Which branch has 10% or more? So company A now, example now, company A now has 15 million. You know, the total revenue is 50 million. Now company A now earn 15 million from internal and external. The total revenue of company A is 15 million. So let's ask ourselves, does that meet the revenue threshold? If it meets the revenue threshold, please let's use our thumb up. But if it does not meet that revenue threshold, let's use thumb down. Okay, fine. So we all understand that it meets the revenue threshold. It is very straightforward. IFRS, it is very, in fact, when it's come out now, you are going to be like happy. The revenue threshold, what are we going to do? Okay, I can see some hand. I'm going to take question. Please, let's take it one after the other. So branch A has what? Branch A has 15 million. Then branch B has 10 million. Then branch C has 5 million. Then branch D has 20 million. Why then branch D now has like 2 million? So what they are now saying is that you see all these brands that have 2 million and 5 million. You know, 5%, 5 million out of 50 million. Is that not 10%? Yes, that's 10%. That means that branch, that particular branch too, it's met the 10% threshold. So the cheapest question I can ask you is that they are just going to give you revenue or assets. They now ask you that identify the reportable segment, or talk about which one is reportable. So that's what they are going to. So IFRS 8 is very, very simple. So apart from revenue threshold, we have the second one, which is profit or loss threshold. If you look at it now, profit or loss threshold, my number 2 part now, look at it. It's saying the absolute amount of segments reported profit or loss is 10% or more. So another criteria that might be met or that must be met is profit or loss. Can you see that I highlighted it? I put that 10% profit or loss. So when a segment has 10% more profit or loss, or 10% more, then we must report that segment also. We must report that segment. Then the third one is the segment assets are 10% more. So when you calculate all the assets of that segment, you now discover that this segment has more than 10%. The assets. You see, criteria number 1 is revenue. You must have 10% or more revenue. So IFRS is saying immediately any segment has more than 10%, please report it. That is the criteria. When it has more than 10%, even though it's all of them that have 10%, please report them. But anyone that has less than 10%, you are not going to report them. Now, let's take note. They said MB, to be a reportable segment, it is not so compulsory that all the above three conditions must be met, but at least of the three conditions must be met. What they are saying is that branch A now, when you see the revenue of branch A is more than 10%. However, the profit or loss and the asset is less than 10%. IFRS 8 says you should recognize it. You should report that segment. Once you have once one criteria is met, you can report it. It's not that you are going to look at the revenue, the operating segment, the profit or loss of the asset. It's more, no. They just say you should pick just only one out of the three. So apart from that, now let me now talk about some segments, which is aggregation of operating segments. Now, there are some criteria that whereby there are some segments where none of the criteria, the three criteria, remember very well. Number one, revenue. Number two, profit or loss. Number three, assets. When these three criteria are not met, there are some segments that must or that might be reported. And where are we going? What they are saying is that you may aggregate, you must combine two segments. Let's say segment A and segment B. You are now going to join them together, then you now report them as one. And that is what IFRS 8 is saying. And before you do that, please, before we go there, I need to show you exception. It is called 75% external revenue threshold. This 75% threshold, that means there are some companies, there are some branches, there are some subsidiaries that do not meet the 10% threshold, and they will be reported. So why are we going to report them? What they are saying is that when the external revenue of all identified segments, that means the reported segment, let's say out of our 5 branches now, only 3 met the criteria. The remaining 2 did not meet the criteria. So what IFRS 8 is now telling you that you now add up the 3 reportable segments that you reported. All those 3, you add it together. When you add their revenue together, are they up to 75%? That is the question. You now ask yourself, when these 3 identified segments, when you add them together, are they up to 75%? If they are not up to 75%, IFRS 8 now says what? IFRS 8 says, please go and report another segment. You need to report additional segment to make sure they are 75%. Please, let me say this once again. For the people that are not hearing, for the people that don't get it, for the people that don't get what I said, what I'm saying is that the 3 segments that we identify as reportable segments, as a result of what? As a result of revenue threshold, assets, or profit or loss, right? So now, IFRS 8 now say add the 3 of them together. And let's do it like this. Branch A has 10 million. Branch B has 10 million. While branch C has 15 million. So now, okay, 10 plus 10, 20, plus 15, 35%. Now, 35 million over 50 million. You see, when you press your calculator, 35 million divided by 50 million, I think that's 75%, right? Yes, that's 75%. So in this instance, the 75% aggregation test has been met. With those 3 segments, when we added all their revenue together, or profit or loss, it's only revenue. Sorry, please don't get it twisted. It's only revenue. When you add the 3 revenue together, it's at least 75%. IFRS 8 says that is okay. However, when you plus all the revenue of those all those three segments. When they are not up to 75%, maybe when they are 70%, IFRS 8 now say you need to report additional operating segment, even though they do not meet the threshold. That is why they call it exception. And another question that can come out in IFRS 8 is this exception of 10% threshold. It's more, in fact, when IFRS 8 is tested, they're expecting it. So do we understand? Now, when we start taking questions, I will take care of that. Now, let's read it together. The external revenue of all identified segments based on the 10% threshold above must at least be 75%. Otherwise, additional operating segments may not have met the 10%, need to be included. Can you see what I just explained now? Once the 75% is not met, let's say 70% or 69%, you need to report additional segment. So when you now report the additional segment, it will now be above. So when you report the fourth segment now, the fourth segment, when you now add the revenue, it is now, let's say, 71%. Can you see that we still have 4%? They will now report the 5 segments, even though the other 2 segments does not meet the reportable segment threshold. So this is the number 1. Then number 2, the number 2 is that there is no limit to number of segments. There is no limit. What I'm saying is that in a situation whereby a company or an organization has 20 segments, there is no limit. If it's possible, you can report the whole 20. So management needs to just exercise their professional judgment when it is appropriate. So now let's move to number 3. Now, aggregation rule. Aggregation rule. What aggregation rule is saying is that 2 or more operating segments might be combined together. 2 or more, sorry, I have a call. So 2 or more operating segments may be aggregated together when they have similar economic characteristics. This is where I'm going. And this is where I need to now show you. This is where I need to show you this aggregation of operating segment. Now, what this place is now saying is that there are some segments that you cannot report them. Why? Because they do not meet the operating segment threshold. They do not meet it. But IFRS 8 says you can report them once they are similar. You can join 2 together. That's why they said 2 or more operating segments may be aggregated together into a single operating segment if aggregation is consistent with the core principle of IFRS. So now IFRS 8 now says there are some criteria that must be met before you can join the 2 segments together. That means number 1, the nature of their product and service are similar. The nature of their product and service are similar. Number 2, the nature of the production process are similar. Once you have 2 segments now, the production process of the 2 are very similar. IFRS 8 says, yes, you can report, you can combine the 2. Then the type of class of customer of their products are the same. Then the method used to distribute their products are the same. Then, if applicable, the regulatory environment, example, banking, insurance, and public utilities. What they are saying in this number 5, that when a company now, let's say a bank now, it now has 2 operating segments. Example, when let's say when Diamond and Access Bank join together. Example now that they are now different bank. IFRS 8 says you can join them together since they have the same regulatory environment. So another key thing that we need to take note is aggregation of operating segment. When can you join 2 or more segments? When can you report both of them together? So Let's take note of the first one, reportable segment, the three threshold, revenue threshold, profit or loss, and asset threshold. Then number two is the exception rule, the 75% exception rule. Please, let's take note of that. Then the last one is very, very important. Now, there are some segments that will not meet any criteria. There are some segments that they will not meet any recognition criteria, and you have to do what? You have to report them. You have to report them. Why? Because when the management believes that the information about that operating segment is useful to the users of the financial statement. Example, there are some segments, a branch now, a branch that is not making profit, that segment does not make, they don't meet the reported segment threshold. However, it is very important to disclose that information. So when the management believes that we need to disclose this information, maybe as a result of, let's say, insurgents or security challenge or problem about that branch, we need to like disclose it. And that is the last point out of this the exception. They said usefulness to usefulness of information to users. So that means when an operating segment do not meet any quantitative threshold, that means 10% threshold, then they may consider reportable and separated disclosure if the management believes that the information about the operating segment will be useful to the users of the financial statement. So that those are the four criteria. Criteria number one is that the 75%. Once you don't have more than 75, you can still you add additional one. Then aggregation rule, they are not limit. The management can exercise professional judgment. Then usefulness of information to users. Then those are the four. Now, discretionary inclusion. Discretionary inclusion. So, which is otherwise known as there are some segments in which it is only the management just believes that we need to report them. And this discretionary inclusion is included in this exception rule. Number one, let's see it. A segment that does not meet 10% threshold may still be reported if the management believe such information will be useful to the user of financial statement. Can you see now? We said it in our point above. The number of internally reported similar in economic segments that individual do not meet the threshold may be combined. I said this one, which is aggregation of segments. When two similar branches, two similar segments have the same economic characteristics, you can join them together, even though they do not meet the 10% threshold. Then the third one, very, very important. A reported segment reported previous period. Do you remember very well that uh, one of your characteristics of financial statement is that you must prepare your profit or loss account every year. Every year. Last year, statement of financial position will be different from this year. So now what they are saying in point three, in this point three is that last year a branch was reported. A branch was reported as a reportable segment last year. But this year, the company or the branch does not meet the threshold. So what IFRS 8 is now saying is that the entity should continue to report it. Example, last year we earned 100 million naira, and the revenue of that company last year was 15 million. So 15 million out of 100 million, you agree with me that the company met the 10% threshold, right? Yes. Now, this year now, the revenue now fall to, let's say, 80 million naira. Now, the company now earn 10 million. So 10 million out of 80 million, that's 8%. So the company does not meet the revenue threshold. So what IFRS 8 is now saying that when it's a situation like that, last year I made the threshold, but this year I did not meet the threshold. IFRS 8 says you should continue to report it. You should report it if the management believes that that segment is important to the users, that you can continue to report that segment, even though that threshold was not met. So that then the last one, segment identified in the current period. In the current period should also be presented for both current and previous period, except when it is impracticable, identified in the current period. So just like the third point, this current period now, this year, the segment was identified, but last year or previous year, it was not recognized, just like example of the first one. So we must continue to include it as a reportable segment, except when it is impracticable. Impracticable means it is not possible. When it is not possible, and how can it be not possible? Maybe when the aggregation with the 75% to heads and all the criteria have all been met. So that is what IFRS 8 is saying here. Now we now have the disclosure requirement. So what are the disclosure requirements that the standard says? These are the information about the entity identifies that was identified as operating segment. So you need to disclose information about them, their revenue, their costs, their important ratios, and the like. Information about the reportable segment profit or loss, segment assets, liability, and basis of measurement. Those are the disclosure requirements. The reconciliation of total segment revenue, reportable segment profit or loss, and asset. A reconciliation must also be. Then the types of products and service of each operating segment. Now, the standard says you should disclose it. Then the segment asset and liability and the basis of measurement. Is it at fair value or at cost model? So which one did you measure that reportable segment at? So that's what uh, that is talking about. So we have measurement. So the amount reported for each operating should be amount reported by to the chief operating decision maker when allocating resources. So then practical example of operating segments might include geographical region like North American, Europe, and the likes. So I think that's all. That's all. So operating segment, just like I said, is a very short standard. A very short standard. A standard that when it is tested, there's no how you are going to get a significant amount of mark. You are going to get significant whenever it come out to, because whenever a question is set, they'll just tell you this, or this is about this, or this is about this. So before we take a look at a question, I think we can look at a question this night. So let me just take 2 or 3 questions. So okay, peace. I think you raise up your hand the other time. Can you go ahead and ask your question? So please, let's remain muted, please. Let's remain muted. Please, it is very, we are all professionals here now. Let's remain muted. So peace, are you still here? Do you still want to ask your question? Okay. Okay. Miss Happiness, okay, you can go ahead. You can go ahead with your question now. Hello, Mrs. Happiness, Faith Blessing or something. Okay, Happiness, yes.
Good evening. Thank you very much.
Yes,
My
you are welcome.
question is I have two questions actually. So the first one is this:
Okay.
can you please help me explain this absolute amount, the profit or loss, like when you're giving a question, because I have gone through the past question before. So when you're giving figures like five for profit and or loss, how do you add it together? When you say absolute amount, are you adding, no, it's profit or loss? For the loss now, it's going to be in it's going to be a bracket, and then for
Yes,
the addition, that's for the
yes,
profit, is going to be
yes,
like addition. So when they say absolute amount, are we adding it together, or we adding the profit or loss, then lessening it the um from the
yes.
loss?
Okay, okay.
Yeah, and then
So, okay,
okay.
your second question. Okay.
And then for the, you said the aggregation of those criteria for aggregating two segments. So
Yes.
my question is, must it meet the five criteria that you mentioned, or just if it meets one of those criteria, then you can aggregate two segments together?
Okay, okay. Okay, I've gotten your question. All right. So your first question is that the absolute amount is that when you want to determine your operating segment, you need to add the profit together. We have branch A, B, C, D. You add all of them together. Let's say branch A has 20 million, branch B has 20 million, branch C has 30 million, that's 70 million. Then branch D now has a loss of maybe 20 million. So 70 minus, you have to deduct that minus, that loss. You need to deduct it from the to get your total profit or loss. So you deduct it. Whenever the deduction is applicable, you deduct. Whenever it's addition, you. But remember, in this instance, that branch that made loss, I don't think you can report it because automatically it cannot meet the 10% threshold, right?
Yeah.
Yes, it cannot, except if it is very possible, except if the omission of that, just like the criteria I make, the discretionary inclusion, that if that segment, if the information is very, very important to the users, then we can now disclose, we can now report that segment. So that is the only instance. So that is your question number one. Then your question number two is okay, you asked about the aggregation rule that similar report that when we want to report similar two or more reportable segments. So what IFRS 8 is saying here is that when you have 75% rule, whenever your 75% rule is met, you cannot report any other segment. But when your 75% rule, which is 75% revenue threshold, is not met, maybe it's 70% or 65%, and you want to report additional segment. Now, the rest does not meet that threshold, right? But
Yeah.
what they are now saying is that you now identify two segments that these two they have similar economic characteristics. IFRS 8 is now saying you can join them together. Once they have the same economic characteristics, you can join them together, even though they do not meet that threshold. Even though you since
Yeah.
they have yes,
Well,
since they have
what I'm just saying is that, the characteristics are like five similar characteristics. So I'm saying that must it be the five characteristics, or you can just take one that is
no,
one
just
of.
one, just
Okay.
one, just one.
Oh,
Once
okay.
one is okay for you, one is okay. When you just pick only one, okay, their products and services are the same. Just pick two of them, match them together. So it does not necessarily mean that they will meet all the five characteristics of threshold. So that is it.
Okay,
So
so
that
sorry, for the profit or loss, if it's not in the policy, or it is not required to be disclosed, is it okay to just to add only just the profits and ignore the loss, instead of adding, when, since you said the loss is not it's not going to be part
no,
of
you
what
can
the
sorry,
segment.
you cannot ignore the loss. So you are going to standard is a principle base, and that is where you remember your chapter one. rule-based and principle-based. It is the US GAAP. You know, we have two popular standards in the world now, the IFRS and the US GAAP. So IFRS is a principle-based. The standard will tell you this is what you are going to do, and this is what you are going to do, and this is what you must do. So the standard says you must aggregate, even though one of them have loss, add it together. You just add it at the back of your mind. However, please take note, it is not because that you want to present it in your financial statement. Though. The reason why you are adding all those revenue together to determine your 10% ratio is for you to report. Is for you to report. It's not, it's for you to determine your reportable segment, rather, sorry, for you to determine your reportable segment. That is why you are aggregating them together. It is not that you now go and put it in your financial statement that this one make loss, although you are going to prepare your group accounts. And when you are doing your group account, if you remember, the revenue of A and B must be matched together.
Yeah.
So, and if you remember very well, when a company has a loss, it does not mean that the company does not have the revenue. If you remember very, the revenue can be 100 million, then the cost of sales and the administrative expenses, they will now be more than 100 million. They will now result to a loss. So, and you must meet only one criteria. So that is it. So that's fine. And Miss Happiness. So let me take another question. Hope you are fine, right? So
Yeah, fine, thank you.
okay, Mr. Abubakar, can you go ahead? Oh shit. Time is good.
Good evening, sir, and thank
Yeah,
you for your time, sir.
okay, you are welcome, sir.
Yes, my question is for those segments that
Yes,
they meet up the threshold.
yes.
If we are to aggregate them, is it necessary for us to arrange them in ascending or descending order, or we can
Yeah,
just pick any of?
just pick anyone. Just pick anyone, my brother. Anyone, just pick. This ascending or descending. You can just professionally, you can arrange it one after the other. Okay, this one, he has 3 million. Then this one has 2 million. Then this one has 1.5. You can do it that way. The standard does not specify which one should come first or which one. Just report them. So that's it. That's it.
Okay, sir. Okay, sir. It's very clear. And
All right.
quickly, secondly, sir,
Mm.
associates. Can we say associates too? Can we say they are operating segments? Associate of the
Um,
company.
associate of the company. Um, can we say is an operating segment? If you look at the standard here, the standard also the standard specifically describes subsidiary. So when you look at it, although when you assess that associate very well, it might be. So just like when you go to when we get to sub, now I don't know, maybe you have saw sub. When you see sub that was tested last to diet, is a situation where when you look at that question, the parent company has just only 40%, which is an associate. And do you believe that it was reported as a subsidiary? I think we are going to solve question on those aspects. So it depends on the angle. So when you look at the angle, when the criteria, when the definition is met, and that's the reason why the definition says when a company's revenue ends its revenue, then when you have discrete information, then that is it. So it might, then it might not, or it might. So it depending on the angle. So, but the key parts are the branches, subsidiary, department of an entity. Those are the operating segments. So that is it. So that is it.
Thank you, sir.
You are welcome. So okay, Mr. Olusono. So let me take let me take one more question. Let's quickly take question. So, Mr. Abubakar, you can mute yourself now. Mr. Olusono, please, can you go ahead with your question? The time is going. Mr. Gabriel. Mr. Gabriel is not here. Mr. Gabriel is not here. Okay. Mr. Ayomide, can you go ahead? Mr. Ayomide. Okay, Mr. Ayomide has dropped too. Maybe network. Then Mr. Lawali. Okay, Mr. Lawali, can you go ahead?
Okay, thank you, sir. Thank you so much, sir. Yeah, still on these exception to these standards. In a situation
Yes,
where we have a scenario base where we have like say 10 operating segments, and we are not trying to
yes,
aggregate the activities of this segment based on those threshold criteria that we have
yes,
enumerated,
yes,
and
yes,
having their revenue across board, and yet we can still get 75%. So
yes.
what's going to be the implication?
So it is very, very simple. Since we have aggregated all of them together and they do not meet the recognition criteria, they do not, I mean, that's your question, right? Or out of, let's say, for
Yes,
instance,
yes,
when we
yes,
added
yes,
all of them together, yes, when we added all of, none of them met that criteria, right?
yes,
If I
yes,
can, okay.
yes,
So,
yes,
like, okay, no problem. Please, if we say it's practicable, like in a real term, at least one of them will meet their criteria. At least one, because if their revenue is not possible, the profit or loss is not possible. It's possible, assets will be possible. So, but let's just use it as this question that it is not, none of them met the criteria. So what I, and that is why the standard says when none of them does not meet the 10% threshold, what are we going to do? Then we are going to move to other exception. And if you look at the exception, they give us the exception rule. Look at it now. The first exception that you must always remember is the exception of the management judgment. When the management remember that out of these 10, out of these 10 segment we have, we must report this branch that is in Borno State. You know, Borno State now, when we look at it, security challenge is another thing. We must report this. And that is the reason why the first thing we are going to do is the usefulness of information to the users. That out of all these branches we have, at least we must report these four. Maybe as a result of performance, that okay, out of all these Olodo branches, at least one of them is better. So that is number one. The number two is when you bring about aggregation rule. You see, example now, all of them, they have 20 million, 20 million, which does not meet. So when you look at them again, you look at, okay, which one has a similar economic characteristics? Which one has product and service that are the same? Which one has this that are the same? So those are the criteria you are now going to use to report them, since they did not meet the criteria. So you can now use the aggregation rule. You can use it, most importantly, you can now use the usefulness of information of that users, of the informations to the user. So that's what you are going to use. And that is why the standard is very clear. The standard have placed everything down for you. That if this one does not work, don't worry. Let's pick this one. Let's disclose this. So that is it. So hope you are fine now, Mr. Okay, Mr. Lawali. That's good. So I think that's Mr. Oladile. Oh yeah, let's take the last question. So let's look at this question together. It's a past question. Let's look at it together. Then by 10:30, let's round up. So let's round up. Mr. Oladile, are you there?
Okay, yeah, I'm there. Thank you.
Okay. Okay.
We talked about the reportable segments, that in
Yes.
reporting a segment operation, we
Yes.
should report both for the current period and the
Okay.
prior period.
Yeah.
How do we report a reportable segment threshold for current period and for prior period? For
Okay.
prior period, basically.
Okay.
That's my concern.
Okay. So now, if you remember very well, in line with your IS1, your IS1 says that when you want to present your financial statement, there is you must follow you must present your financial statement using the current year and the previous, which is the comparative figure. You must show your comparative figure. In the sense that when you are presenting a financial statement of 2024, in that financial statement, you must display or you must disclose 2023. So, and that is one of the key components of financial statement. You cannot only disclose only information of only 1 year. So you must disclose the previous year, which is otherwise known as prior year. So what IFRS 8 is now saying is that when you want to disclose this information, IFRS 8 is saying you have to disclose it in your notes to the accounts. Please, let's take note. All this information must be disclosed in the note to the account. So whenever you are disclosing your reporting segment this year, so, and this instance is rare. That's why they call it discretionary exclusion. That means there are some reported segments in which last year they met the threshold, but in the current year they did not meet it. So what are we now going to do? We are just going to disclose it in our note to the financial statement that this segment last year they made the threshold, and this year, however, they did not meet the threshold this year. So we are just going to disclose it. So it's not about that we are calculating anything or something. So it is the standard IS1 that says whenever you are reporting something, you must report your comparative figure, which is your last year. So that is how you are going to disclose about the reporting.
No, my concern really is if they meet the threshold this year,
yes,
but last year they didn't meet the threshold.
Yes.
Is the standard saying that, okay, in reporting the current year, in reporting them as a reportable segment this year,
yes,
I'm going to also go back to last year and say that, okay, this was their situation last year.
Exactly. You are just going to report it that okay, that segment was fine last year because we reported it, but this year, this is what happened. We are just going to report it, and that's why if you look at our last in our final, they give us information that must be reported. That okay, their revenue, their profit or loss. So we are just going to disclose it in our notes. So note to the financial statement, that's where we are just going to disclose it. So that is it. Hope that answered your question, sir. So okay. So I think that's all for tonight. Let's stop the question there. So let's look at this question together. Let me present this question. Let's present
Hello,
this question.
sir.
Hello.
Hello. You called me the other time, but the mistake that I made was that instead of me to unmute my mic, I lowered my hand.
Wow. So that's the reason why we are calling that Mr. Yomide. Okay.
Yes. So I was now shouting, hello, good evening, sir. Can you hear me? But later I now realized that I lowered my hand. Please, sir, I would really appreciate it if you could allow me to answer my question. To ask my question rather.
Quickly answer. So before we move on.
Okay, thank you. And I am very, very grateful. So please, sir, when you said that the reporting and what is it called? When the segment that the revenue reach the threshold of 10%, including both internal and external sales. Yes. Am I right, sir?
Yes.
Now, this is where this thing is now confusing me, because according to IFRS 10,
okay,
the consolidated financial statement, the standard states that all intercompany transactions between both parents and the subsidiary, or even among the subsidiary, must be eliminated. Now, so how do we marry this with this operating segments now that is now saying that we should also report both internal and external sales. So that is that's what I don't understand now. And I
Okay,
will be glad if you can throw more light
okay,
on this. Thank you.
okay, okay, no problem. So this is actually a good question, but the only thing I just need to like explain is that IFRS 8 is a disclosure standard. You see, our group account, which is our consolidated financial statement, that deals with figure. So what IFRS 8 is saying is that apart from your group account that you have prepared, you have eliminated this, you have in your note to the account, let the users, the objective of this IFRS 8 is that you want to report your branches, your subsidiary, your department. You want to report performing, the underperforming and overperforming segments. So what this standard is saying, you just want to report, you just want to tell your users, the users of your financial, this branch A is doing very fine though. So it does not contradict IFRS 10. IFRS 10 is okay, you are presenting your financial statement. You are consolidating your profit or loss, in which you are going to use the principle of IFRS 10. You eliminate your intercompany and the likes. You eliminate this, you eliminate that. But that does not stop your IFRS 8, because IFRS 8 is just a disclosure standard. You are just disclosing, you are just passing information to people that okay, this is this is the segment that is performing well before, because out of 10 segments, if any one of them can make 10%, that means that segment is performing. So you just want to disclose that information. This segment has more than 10%, because out of the disclosure requirement, IFRS 8 says you should disclose the information about the profit or loss, the revenue. So it does not contradict each other. So IFRS 8 is just saying you should just disclose. You just tell the users of the users of your financial system, okay, this is it and this is it. So that is just it. So that is it. Please don't get it combined together. They are different. This one is just disclosing information, and that one is. So that is it. Hope that answered your question. You are welcome.
Yes, it
So
answered it. It answered it. And furthermore, so if I will get you right, that means all the standard that are disclosure standard, they are only passing information. The value of
exactly.
The value,
exactly.
maybe the value of the value attracted to that, associated to that information they are passing, will not reflect in the financial statement.
Exactly. You are just passing information. Yes,
that's very much.
Yes,
thank you so very much. Thank you.
You are welcome. You are welcome. You are welcome. So that is just it. Mr. Olusono is back. I don't know, maybe it is as a result of Mr. Ayomide's, maybe he too is like trying to talk. So, but please, let's quickly look at this question together. We don't have time. And okay. Let's quickly look at this question together. Let's just look at this question together. It's very important we look at this question together. Okay, let me present it. So let's look at this question together. Then I'll present it now. If you can see my screen, let me know. Okay. Okay. So can you see my screen now? Okay. That's fine. So let's quickly look at this question together. Just like I said earlier, I said IFRS 8 is a very straightforward standard. In fact, the only question they can ask you is just the past question guide. We are working on it. When it is available, we are going to share it. So now let's look at this question. Is it November? Is it 2023 or 2024? So Popsi PLC has identified the following segments in its annual financial statement for the year ended September 30th, 2020. segment A, segment B, and segment C. So now, the company disclosed two reportable segments, segment A and segment B. Segment A and segment B were aggregated into a single reportable segment. Segment A and B we are aggregated together, we are joined together to be a single reportable segment. Segments A and B have been aggregated on the basis of similar basic features. That means similar economic characteristics, if you remember very well. Segments A and B, they were aggregated based on similar characteristics and the nature of their goods and services. Now, someone say you cannot see anything. Please, it's your network. Please, can people react? Can you see my screen? Please, it's your network. I think it's your network. I think it's your network. So, but don't worry, it will come back. It will come back. Just wait. The network, it will pick. Yes, yes. Because I can see my screen here too. So please, let's go on. In the local train market, it is the local transport authority which awards the contract and pays POPSI PLC for its service. In the local market, it is the local transport authority that award contract and pay POPSI PLC for its service. In the local train market, contracts are awarded following a competitive tender process, and the ticket prices paid by the passengers are set. Okay, let me quickly enlarge my screen. Okay, let me enlarge it. Okay, let me enlarge it. Okay, I think it's fine like this. For the people looking at YouTube. Okay, so now in the local train market, contracts are awarded following a competitive tender process, and the ticket prices paid by passenger are set and paid to the transport authority. In the intercity train market, ticket prices are set by POPSI PLC, and the passenger pays POPSI PLC for the service. Can you see story? They now said what? Advise POPSI PLC on how these issues should be dealt with in the financial statement for the year ended 30th September 2020. 10 marks, that is operating segment. Let me look at B. POPSI was given a building. I think this one is IFRS 16. When you are hearing building, it's IFRS 16. Okay. Building needed renovation and the like. This is IFRS 16 and IFRS 40. So it is only that A that is. So can you see now? They said advise how POPSI should report, should talk about these issues will be dealt with in the financial. This is IFRS 8. And can you see what I said now? IFRS 8 is not a standard that ICANN will now be giving you figures. All what they don't want you to talk about is just to talk about operating segments. Why did they report operating segment? What is the rule for recognizing a particular segment? Which threshold? So they are just telling me how the POPSI PLC report the above. How should they report the issue? Can you see that there is no figure there? There is no figure. Now let me show you something now. We don't really have time. I want to quickly show you this. So IFRS 8, I usually beg for Almighty God to just set it for my student because there is no big deal there. It's a standard that is very cheap. Let's see. They asked us to discuss about the issue. Let's just discuss the issue. Then this is okay. So this is solution 2. Now solution 3. There is no time. Can you see now? What are they saying? They said we should discuss how this issue will be reported. Can you see? So if you look at that question, if you pick that question very fast, they just told us that company A and B, they are reported, they have the same similar characteristics, they are aggregated together. Then company C was not reported. So they now ask us to disclose. So if you look at this question like this, since we don't have a lot of information about this, what are we going to just discuss about the operating segments? That's number one. Number two, then the aggregation. How can we report? What is the basis for aggregating two segments? So if you look at the solution, aggregation of operating segment, because that is the simple information that was passed in that question. The train, all those train, the train authority are the one collecting tickets. They should not collect. Is it the federal government that will collect the tickets? Now, is it the federal government that will be collecting train tickets? All those information, you don't need it. All what you just need, they want to know. Do you know something? Can you write something about operating segment? And that is it. If I say defines operating segment as a company which engages in business activities, can you see the three definitions of operating segment? Operating segment requires quoted companies. That means that's the objective, that's the scope of the standard. We talked about it, that it only applies to quoted companies. That means public liability companies. So private companies, IFRS 8 does not apply. So you just tell them that requires quoted public to disclose information about their different operating segments in order to allow users of financial statement to gain a better understanding of the company financial position and performance. Can you see now? That is the main objective of IFRS 8. Just give information to your users. Which of your segments is fine? Which one is not doing fine? Which one can have similar characteristics? So quantitative threshold, can you see now? That 10 marks, they just want you to talk about all the key points in IFRS. Look at the quantitative threshold. An entity must report separately information about the operating segment. That means the following quantitative threshold. Its reported revenue, the internal and external must be 10% or more. The reported profit or more, 10% or more. Then the asset, can you see now? Then reportable segment. An entity must report separate information when it has identified according to definition, when it is aggregated with another segment, then exceed the quantitative threshold. Then they talk about the aggregation, because when you look at that question, the only key information is that that A and B, that segment A and B, that we are combined together. And they told us as a result of similar basic characteristics. So when you pick that information, you know that they are talking about aggregation of segments. Just tell them all you know about, because all those tickets, all those train tickets, that one does not concern you. So can you see their solution? They just talk about all operating segments, the threshold, the aggregation of segment, the 5, and you are fine. So they now talk about, they said, aggregating operating segments A and B on the basis of similar basic features and nature, but the customer for the goods are different. Therefore, aggregation may not be permitted under IFRS 8 due to while the goods and services are similar, the customers for those goods and services are different. Therefore, the third aggregation criteria are not met. In local market, the company is not exposed to. Can you see all this one they are saying? Can just give you how much? I can just give you like 3 marks. All those ones that you have seen about the principle, that's your key thing. So look at it again. My battery. In the local market, the company is not exposed to passenger revenue risk since the contract is awarded by the competitive tender. In contrast, in the intercity train market, the company is exposed to passenger revenue risk as the site is price, which customer may not be. The fifth criteria, regulatory environment is not end. So what they are saying here is that operating segment A and B, can we report them or can we not report? So they are now telling us why it should not be reported. And if you look at this question, they can be reported when one of the criteria are met, since they have the same basic similar features, which is the goods or services or the regulatory environment. So they are telling us the regulatory environment is not met. So the local market and the goods and services and the likes. So operating segment, this is operating segment for you. If you look at another question now, that's another question too. But all the operating segment questions are very similar. So in conclusion, the two segments have different economic feature, so should be reported as a segment, as a separate segment rather than aggregate segment. So what they are telling us is that they could not, we are not supposed to aggregate them together because they have different goods and services. The customers are different. Local market, the company is not exposed to revenue. So all this story, you don't really need it. You don't really need it. All what you need is just look at. Okay, let's go back to the question. Oh shit. The diet is very, oh shit. Let's go back. Let's go back to our screen. Let's go back to our screen. So I think we are going to look at, let's check more questions. Let's check more questions. They are not I think there are so many questions in the past question guide that we can still check, but I don't think we can check them tonight because the time has gone. There is work tomorrow. So operating segment is not something we have to be like cracking our head. If we can find another question, you can send it to my DM. Just send it to my DM. Let's discuss about it. Or then next week, maybe we can, if I can find another question, or we can discuss more about this. So let's find more time. My laptop is about to go off. So we need to end this class. So question, okay. Mrs. Blessing has a question again. Okay, there's no problem. Please, just send your question to my DM. If you have any question, let's send it to my DM. I will check it. So okay. We can't take any other question tonight. My laptop is going to off at any moment. I will need to save this recording. This Google something, we need to save it. So I'll send the material. I'll send this material immediately. I'll send it immediately. I'll send the operating segment question, the notes immediately now. So thank you everybody. The time, the laptop this night. So yeah, welcome. Thank you everybody. Good night. So our class continues tomorrow. We have a class tomorrow. We have so I will send it to the group. So good night everybody. Good night. Good night everybody. Good night everybody. All right. Bye. Good night everybody.
Bye, sir.
Bye. Good night everybody.
Good night.
Good night, sir. God bless you, sir.
Good night, sir. Thank you.
What time is our lecture tomorrow?
9 p.m.
9 p.m. Okay. Same time. Okay.
Yes.
Thank
And
you.
thank you. Yes. Thank you everybody. Good night. Good night. Good night.